Good morning. Welcome to our Thursday morning trading room. So, we had a little bit of a roller coaster ride yesterday. Here, I thought the bottom was going to fall out of the stock market, and it did for the morning. Had a huge decline right out of the gate. Market ended up going sideways. We did pick up a little bit of a retrace here before we closed the room. After that, the market went stagnant until around mid-afternoon, where it rallied and practically recovered all of yesterday's decline. You can see that the Asian session and the overnight session pretty much non-existent last night. So what do we make of that? It's a crazy day. Was that a blow-off by the buyers? Here, Trade Forecaster says we are going to be in trend mode for a little bit more than an hour. But we'll hang on here and see how things play out. It's only about a minute or so since the market opened. And right now, it does appear as though the buyers do have the upper hand. We are getting a couple of signals here. Most noteworthy here on the Raptor, we have a continuation signal. This came pre-market, but we're getting another hard edge bounce here off of the open. And you can see that it's tagging the highs, or close enough anyway. And likewise here on the Hawk, we're getting a first micro-macro cross, and here on the Eagle, this is our first in-sync signal of the day. And here too, we have the opportunity for a second push entry. Now, I'll admit this is a little bit of a gamble this early, going into a little bit of a sideways trading range / triple top, however you would like to view this. But there's no denying the buyers had the market under control going into the close yesterday. And by the way, this is very early, especially for me. I'm just looking at this signal primarily because, well, that first Eagle signal does have a way of working itself out. Yesterday was the exception, however. We did not get our first in-sync signal until the end of the move. And that is rare. That is very, very rare. But I guess the market was unfolding so quickly that we could not get, looks like we were trying to get a little bit of a pullback here, in which case the Eagle would have come back with another sell signal, but it didn't work out that way. All right, we're falling off here a little on our suggested Eagle trade. So I'm going to cancel that order now. Looks like we are going to drift back, test the bottom end of the trading range. And a lot of these numbers are going to be sounding familiar from yesterday. Here we are back at 5,800. We see there's primary support down here at 57.93 half. I do believe 57.95 was kind of an influential number yesterday, at least for a little while. And then, of course, 57.82, that was a big one as well. So right now, the Raptor working a possible counter trend signal. That's our soft edge sell signal. But we are pretty much sideways. See, here's our sideways range. And when you're in a sideways range like this, we're going to see buying down here. We're going to see selling up here. The middle is going to be neutral. For this reason, it's normally best to let the market get outside of this range before you commit. Let it get out, let it show that it can stay out, then look to buy. There should be a buy signal that prints. Likewise, if we get a breakout lower, there's normally a little bit of a retest, and then we'll come back with some sort of sell signal. Oh gosh, look at this. We've got the Hawk and the Raptor kind of confirming this sideways mess that we have going on. The Hawk producing a whole lot of yellow bars. Look at that. All these yellow bars. Printing more or less the same price level. The Raptor showing us a similar thing with all these yellow bar clusters, again printing around the same price range. This is a valid signal, by the way, this hard edge bounce that we're getting, the number 3 signal. But because the context is so sideways, you may want to, take a second push on the entry, let the signal engage, and then flinch. You may want to cover the trade a little bit deeper. Again, because we're in this sideways trading range, right? There's going to be sellers up here. There's going to be buyers down here. And until we emerge from that range, it's going to be tough to decide who is in control. See, right now the signal is falling off, so I will cancel that, I think, for the moment. Or actually, I suppose I could leave that in. Why don't I leave that order parked? It hasn't gotten so stale that because I am looking for a second push opportunity, right? So a little bit of resistance here at the median line. You can see the median line, that's this gold line. In our support and resistance suite, we've pretty much skewered the price action right in the middle. It's hard to believe it's 1st of June already. My goodness, what happened to the last few months? It seems once January and February are over, the rest just becomes a blur. Well, hello, Andres. I am fine. How are you? I don't know what it's like in your part of the world, but here in the Pacific Northwest, it does not seem summer-ish. The last couple of days have been kind of gray and wet, a little bit more fall-like, actually. Everybody's going around half joking, saying that we've gone straight from May to October. All right, so got filled on that buy order. We'll see if we get a little bit of follow through here now. Okay, checking out the high of the day, 58.09. We'll see whether we can press through there. And since this is an early trade, you know, very often I try to run these types of trades out, but I think I'll be content with my profit target if I can get it. They're trying. We'll give them just a little nudge over the line there. There we go. Come on, get up there. Come on, one more tick. You can do it. Ah, there we go. Okay, so we're getting, as you can see, another number 3 signal, another hard edge buy, which is what you would anticipate. That's reacting now to this hard edge, but of course we're already long from the previous signal. Now we're fighting with this high here, which is 58.09 3/4. Looks like we hit 58.09 half. Oh dear, now we're getting a little bit of a flinch. There's 59, there's 3/4, there we go. So you saw that little hop up in price once we went on the other side of 58.09 3/4, being this high right here. That little spurt that you saw was because all the traders that sold here and here and here and here and here, where do you think their exit orders were? Well, and all the traders trying to sell here on a limit order. Well, their exit orders would have been not too far above here, and that's what caused that little bit of a quick little spike. It's not as much follow through as we normally see, but there was a little bit of a run up there. It's called trapping traders, and it's a great way to trade when you identify a heavy support or resistance area. You always anticipate a little bit of follow through as you start to tag some of those orders. And very often it will lead to a much larger move, but like I said, I'm just as happy to take my profit target today. Especially as we get closer to that whole 58.15-ish region, which is where yesterday's market started before its rather significant decline. We might see that again, or certainly more aggressive selling as we get up there. Good morning, Peter. Peter writes, good morning, Eric. I use the 3 birds, and because of that, I have to lose some screen space. But I'm looking at your Raptor because the screen space is larger. It allows you to see the run-up and the consolidation much better. If you remove the run-up and the consolidation does not look so pronounced. Is the larger screen a benefit to the Raptor? Yes. Yes, it is. It is advantageous to get a good view of the overall context of the market. Too many traders trade just by focusing on the last 3 or 4 bars. I've seen traders build charts, like they'll build their screens. Come on now. No, that's not what I want. They'll build their screens so that their charts are like this. You know, they'll have their charts stacked vertically like so. And I don't know how you can trade like that. By just focusing on the last half dozen bars. That makes no sense to me. That's why I stack my charts the way I do. At least I get a little bit of the context. Now, if you're really stuck for screen real estate and you don't want to invest in another monitor, you can always hide your trade manager until you need it. Right? That helps give you a little bit of context as well. So that's a nice feature. And then when you see something developing, you get a warning dot or you get some interesting formation developing, like here we're getting a first micro-macro cross. I can turn my trade manager back on and then place my trade. Another thing you can do is you can build yourself maybe a smaller chart. So 1 second here. And maybe do something like a 15-minute chart or something. 1 second. Oh, here we want a data series. And I wouldn't be so interested in the overnight in this part. Oops, darn it. And what you could do is you could shrink that up a little bit, kind of give you a little bit more context as well. But yes, Peter, that is an advantage to the Raptor because the system has been implemented to work on one screen. You do get a little bit more information in regard to the context. Ooh. Curtis says, regarding screen size, have you seen the new Dell 46-inch multi-client monitor? No, I haven't, but I am intrigued. I'm running 3 monitors on mine. Aspen says he has 2. I've got 2 21s and a 24. And sometimes I find that that's still not enough, but we make do. Thanks, Steve. Steve says manufacturing at 7. So in another 5-6 minutes, we're going to have a report come out. And of course, oil inventory today, but not until 8 o'clock. Those are Pacific times. The oil inventory traditionally on Wednesdays, but because of the holiday Monday, it gets bumped a day. Oh, and then the president is speaking at noon. And here's the fall off from the highs. Yes, that's right, Tony. Jim, one of our room members, who actually hasn't been around for a little while, I haven't seen him. He uses a large digital television to trade off of as his computer monitor, and he swears by it. Paul writes, "Why am I muted?" Well, short answer, Paul, just to avoid the chaos. I'm the only one who gets to talk. You get to listen to me ramble. But if you have questions, please, by all means, type away. And I will do my best to answer your questions for you. All right, so they're going to try it to the short side now. We've got a first micro-macro cross lower. We are into the hard edge, so we should anticipate some sort of reaction. And have we had a decent test of the extreme? The extreme now being the high at 58.13. Again, I don't know if I want to get in the buyer's way. They are very good at rallying the market back. I would love love to see this first micro macro cross get back into yellow bars. That way I don't need to deal with it. Kind of a funny morning so far. Gosh, now we're still into a macro pullback here. The Falcon trying to change trend. And, well, the Raptor, what have we got here on the Raptor? We're in the hard edge, in the trading cloud. We anticipate a reaction here. I would like to see this come up a little bit, test the high or get close to testing the high, and then fail, and give me a proper soft edge sell signal. That's the number 2 signal. Well, the overall state of the market here, it's going to be iffy regardless which way you take it. You can see we're going to get a red bar buy signal here on the Eagle. That's a bullish signal, providing it prints here at 58.04.25. That would be the high of that bar. Oh, there's that macro pullback I wanted to take advantage of, and now we're going to get a signal here in the Falcon as well. Okay, I'm going to just pop in on that one if I get it. And we're getting a comparable signal here on the Raptor. So let me show you on the Raptor. And can I cover it? Ooh, I can. All right, so what this is a early soft edge sell signal. It is not the full-blown soft edge sell signal because we're not getting the warning saying, hey, we're getting a soft edge sell signal. But the components are here in a smaller degree. So before we can have a counter trend signal, we need to have a with trend signal, right? So we have had a very, very strong uptrend. Excuse me. So there's our strong uptrend. Then we need to see a retest and a failure. So I'm considering this as the retest of the uptrend. Now, it doesn't seem like much of a retest, but I'm also taking into consideration that the market's been in a sideways drift for about the last 8 or 9 hours. Oh, here they come again. And we're getting the same signal. So you see we kind of did another little retest there. And now they're going to try to test the bottom end. And my goodness, they've got a little bit of momentum going on here. I did have to cover the trade fairly deep, though. Did I get a positive slip on that? No. There we go. All right, so we're looking at the market trying to sort itself out here. And as I mentioned, this is a little bit more aggressive. It is an early sell. Yeah, Andre says news time. Yes, there was a little news came out there a moment ago. Sparked the market slightly, but so far no serious follow through. I'm trying to give this trade every chance I can to sort itself out. All right, and I think I will get ready with a stop. If we see the market challenge the lows, if I can get one more bar to finish lower, get my mouse out of the way. Peter asks, Eric, if you don't get a move in the first 45 minutes, should I book a tee off time? Sounds good to me, Peter. Yeah, usually it's the first, I find the first hour of trading really to be the most active. First hour and a half. Sometimes you get a little bit of a burst going into the lunch hour, but after that, you just hold on until the close. Okay, this is close enough to break even. You see how we're kissing the break even, but we haven't hit it? I'm going to force the trade to break even at this point. Now, that might be too early. Looks like we're getting maybe an early reaction here to the primary support line, and I might have fooled myself by bringing my stop up so fast. Darn it. Darn it. Oh well. We'll see here in a moment whether that was a good call. I think I tweaked myself out of a good trade. Oh well. Yeah, there they go. Scoundrels. my break-even trigger now had I left well enough alone, but I got a little panicky. That's a trading term, by the way. So it looks like I would have made my profit target. Let's see, my profit target was 57.92 3/4. Nope, not quite there yet. Have to get on the other side of the primary support. There we go. Now, I'm thinking that the market is a little bit more bearish today than bullish. Even though we had that little early uptick, it's looking right now like the market's going to be a little bit on the short side. But given this rather large run up at the end of yesterday's session, or toward the end of yesterday's session, I'm also thinking that the buyers are not going to walk away quietly. I think we're going to see one more serious test of the high or trend resumption. And if the sellers can hold it together after that, then I think we're going to see a more pronounced move to the short side. But right now, a lot of traders will be looking at this current move. Oh, there we go. We got a sell. I'm just going to pop in that sell order just as I was going to go show you something. We got the crossover signal. That's the #1 signal forming. And I'm going to hold my stops back here. Let's see, 709. Just make a few notes here in my trading journal. And here we are back at break even. Oh, come on. You're kissing the profit target and you're not going to give it to me? Come on. Oh, come on. It's just a tick off here on the entry because the signal formed so quickly. I hit the sell market button rather than be able to set up the trade right on the hash mark. All right, well, we'll just let this trade do what it's going to do, and I'm going to show you what I intended to show you before that signal printed. A lot of traders are going to view this current move here as nothing more than a bull flag. This is why I suggested we might see a little bit of a rally. After which the sellers would say, enough of that nonsense, and then try to push the market lower again. Well, that was most unfortunate. One tick away from my profit target. Stinkers. Oh, now watch this. Now they're going to go down again. Andres asked, Eric, do you tend to use the hash mark? Or does it depend on certain circumstances? Well, I use the hash mark, yes, whenever I can. However, if I'm going to get, let's see. Okay, so I got a sell signal right here. Now this is, we were looking at this as a early soft edge sell. So I've got a sell signal right here, the hash mark printing, but about 5-6 ticks later, I've got these lows to deal with. If this is very, very close, I'll probably enter on the other side of this little swing low. However, in this case, you can see I'm going to give up almost half of my profit objective, or at least a good third of my profit objective, before I even gain entry. So on a trade like this, I'll probably bite the bullet and try to get in as early as possible. So that, let's say the market does one of these things, it comes down, because chances are when it's this close to the low, if I get filled here, I'm probably going to get filled here. So it comes down a little bit, maybe for a couple of bars, and then flinches. Well, if I gain the earlier entry, I can do something with the trade. Right? If I'm panicking about the trade, I may hit the break even, get the trade to break even. But if I enter down here and the market does that, well, then I'm pretty much stuck, aren't I? So to answer your question, I use the hash mark as much as I can. The high probability profit objectives are all calculated from the hash mark. However, if I have a reason to allow the market a little bit more room on the signal, I will do that as well. I'm trying to find a decent example of where we get a couple signals printing so close. Well, here's one. Okay, so here's another, well, let's go with this number 2. Okay, so here's a number 2 counter trend signal. Here's a high, only a tick away. Right, the high of this bar only a tick higher than the hash mark. So here's an instance, rather than take it on the hash mark, I would take it above the high of that bar. For the sake of 1 or 2 ticks, I'll take it on a breakout. But yeah, more often than not, I'll just trade it on the hash mark. And here's another instance where I got tagged a little bit early on the break even, only to see the market drift a little lower still. Shoot, that's twice now. Yes, Andres writes, okay, thank you. Understood. If you don't give up too much, you use the hash mark. Yes, that's right. The hash mark is merely a suggested entry point. As I've mentioned before, computers need everything defined. There are no gray areas in a computing program. So we had to give the program somewhere to start calculating the high probability target from. So once the signal prints, it's complete, the triangle prints, the hash mark will print one tick below the low of the signal bar or above the high of the signal bar, as the case may be. All right, we are definitely in a bear market today, and I'm not going to get a second signal to hop on here, am I? Come on, you guys. Play nice. I'm a little choked about those two break-even stop outs, but I suppose they're still better than a loss. Good question. John asked, on the Raptor, can you adjust the filter so it's more sensitive? Yes, absolutely you can. That is the whole point of the new Raptor, is it's a little bit more tweakable than the existing versions. Here on the Raptor filter, just adjust your brick size. The smaller the brick size, the more sensitive it will be. So let's say I dial that down to a 4. And you can see it introduces a lot more into the chart. So with the filter, what you're looking at here is it's essentially a momentum style filter. So you're looking to see, it's actually the whole Eagle Trend Trader programmed in here, but we're going to use it as a momentum style filter where we start to see more bullish or bearish segments. Like here you can see we have a much larger selling bias relative to the buying that was going on earlier. But yes, you can adjust your Raptor filter. Where did it go? Oh, there it is. There we go. All right, so we've dropped down now to a secondary support line. We might get a little bit of a hiccup here. Andres is asking, I might have missed it in the training videos, but you say the hash mark is an entry for a predefined profit target. What is the built-in profit target? For the Hawk scalper, it is $50 per contract. For the Falcon swing trader and the Raptor, it is $100 per contract. And for the Eagle Trend Trader, it is $200 per contract. So obviously you need to adjust those values for the market you are trading. So for instance, with the Raptor, a $100 value in the NASDAQ, which trades at $5 a tick, would be a 20 tick target. If you're trading something like the mid cap or the Russell, which trade at $10 a tick, it would be a 10 tick target. Although I will confess that some of those $10 instruments like the Russell, the mid cap, crude oil, gold, because they're a little bit more volatile, I will double the profit objective. The E-mini S&P, which trades 12.50 a tick, you would have a 16 tick target to get your $100 high probability profit target. See, very often you will see the market make a reaction after it hits its high probability target. That's why we call it a high probability target. This reaction was here, but a little bit added follow through. Of course, these are averages. Occasionally the market will move a little bit more. Sometimes a little bit less. Here on the Geiger counter note, we got a little bit of a buying spike coming through. I wonder if we're going to see some support now. Maybe a little bit of profit taking. Okay, so is this going to turn out to be another test of the extreme? We almost had something resembling a 4-arrow consolidation here in the hawk, and I'm a little reluctant after such a big move to try to squeeze more out of the short side without some sort of retracement first. That's just an opinion, of course. Goodness knows I've said things like that before, only to watch the market fall off the map. But if this holds, I think I could be persuaded to try a soft edge buy. That would be the counter trend signal that would be printing. All right, are we going to see a little bit of a rally here? Is this low going to hold? Tune in tomorrow. Do we have anything else going on here? No, not yet. It looks like the Raptor is going to be possibly the first to produce a buy signal here for us. If in fact we do get a buy signal. Come on, get up there. You know you want to. I could see a retrace here to the primary support, 57.93.5. 58.04, the median line, that might be a touch ambitious. Well, this little bar that's forming right here is going to be a fairly important bar for us, I think. It's yellow, so overall it's got a little bit more neutrality to it, but if it finishes higher, it might be what we need to tip the market into a more bullish bias. And I don't think we've produced any signals here just yet. Still waiting on a counter trend signal to form there in the Raptor. And yeah, nothing really interesting in the other tools. We've got a very drawn out 4-arrow consolidation here in the Hawk. Yeah, it's a tough day today, Aspen. Aspen says, got whipsawed, 3 losers, 1 winners, down $205 so far. That is what we tend to refer to as a rounding error. They're not losses, they are rounding errors. All right, we're getting a little bit more of a bullish push now. That yellow bar. Oh, here we go. I got my warning dot. There's my signal. And I'll just punch in. Oh, I got a positive slip. Imagine that. That never happens. Okay, I'm going to hold my stop just below the low here. Okay, let's see whether we get a little bit of follow through on this signal now. All right, it's a little bit of a struggle, but that's to be anticipated. It is, we are looking at a possible trend change here after all. And I got a little positive slip on my profit target. I was checking to see, I thought about maybe bringing it in just below the primary support zone rather than right on the primary support. But first things first, see if we can get a couple of bars to form in our favor. Yes, Aspen says the news was somewhat bad, but the market is still holding. That's because the news has nothing to do with the market. what people, the news is always late. The market will do what the market will do. And I hate to sound like a bunch of cliches. But the thing is, what a lot of people don't realize with the news is that news reporters view the world through a filter of news. Everything that happens in the world, they process through their news filter, right? If there's a car accident, well, there's a car accident because the driver was drunk or tired, or the vehicle malfunctioned, or the roads were too slippery, or whatever. There's a reason. And they bring that news mentality to the marketplace. The market went down because, oh, why did the market go down? Let's find out. Oh, crude oil prices are off, or some trade deal fell through, or whatever. They'll keep searching until they find something that they can say, aha, that's why the market went up or down. I told you so. Well, maybe. The market goes up because there are more buyers than sellers. The market goes down because there are more sellers than buyers, and that is the long and short of it. Now, if you want to try to find the fundamental reasons behind that, then yes, that's all well and good. And fundamentals do play a part, but you need to step back. The fundamentals, I don't think, are so much day-to-day as they are long-term. For instance, one of my trade recommendations in my nightly update was to short the soybean market. Why? Well, because fundamentally, we've got large ending inventories for soybeans. We've got harvests coming up for soybeans, South American harvests. There's no reason to anticipate there's going to be any shortage of soybeans. And as a result, soybean prices are coming down. So that's kind of the fundamental slant of that. Same thing with natural gas. In my newsletter, had a recommendation to short natural gas, and natural gas prices are heading lower. Same thing. There's big inventories in natural gas. Demand usually tapers going into the summer months, so why not short it? Doggone it anyways. They're gonna do this to me again. All right, I'm going to take the trade to break even, and that's it. That's all you get. You better go now. Come on, get up there. Get up there. Andres is asking, Eric, where are your, I think you're referring to the newsletter and whatnot that I was talking about. You can find out all about that kind of stuff at my website, which is supportandresistance.com. There you go, little shameless plug. Oh, come on. Really? I know you... Oh, heartbreaker. I know they're going to go higher from here. So that's 3 trades in a row. I got break even tap out. Stinkers. Okay, so John asked, Eric, can you review how to set up the auto break even? Absolutely, John. So you're going to go here to your strategies window because this is related to your trade manager. If your trade manager is already turned on, you will need to turn it off before you can make any changes. So go here to your enabled tab, click it to false and apply. That will make your trade manager disappear, and now you can make changes. Roll up here to the very top, and you're going to see auto break-even parameters. Yours will probably say false, so you want to change that to true. And now you set your break-even trigger. What value do you want the stops to start rolling to break even at? Now, normally I figure 75 to 80% of the way to the profit objective. So if I've got a 20 tick target, 15 ticks is about 3/4 of the way there. Well, it is 3/4 of the way there. So if you don't like 15 ticks, you can make it whatever you want, 17, 18, 19. And then you have your break-even offset. This is how much profit you want to lock in. Now, note you can set that to 0. You can even set negative values. So let's say at the break-even trigger, you want it to go to break-even minus 3 ticks. So you're still going to run, 15 tick loss or risk parameter. But I usually capture 1 tick. That helps pay the commissions at least. I'm out of pocket some of the fees. Once you have, while you're up here, you may also want to change your invalid trail stop. Now, the invalid trail stop is when your selected stop strategy is against your market direction, and I'll explain that more in a moment. Yours probably says 10 ticks. 10 ticks is awfully tight. I changed mine to 30 because I can always change my stop once it's active. But if it's 10 ticks, sometimes it's so close to the active market that I can't get it out of the way before I get stopped out for a 10 tick loss. Okay, once you've made your changes the way you like them, I would suggest you come here to the template manager, and here under the save, if you click save, just give it a name. It doesn't matter what you call it. You can call it Raptor, you can call it whatever you want. Press enter, and then you will have saved a template. You can see I have a few saved here already. So next time you load a chart, a fresh chart, you can just load your Trade Manager template. Make it very easy. Don't have to redo that all the time. Last thing, remember to go here to Enabled. Turn things back on and apply it, and now you will have your new changes. Your break-even, your auto break-even feature. And once again, looks like I got tagged a little bit early. Not quite to the profit target yet, but I would have hit the break-even trigger now, I think. Market kind of coasting along here a little. If you wanted, we have a trend change signal here in the Falcon and a first micro macro cross in the Hawk. So there are other opportunities to get long. I'm a little reluctant to get long. We are getting close to the hard edge here on the Eagle. That's going to be my target. That also coincides with the primary support. It is going to be a little bit easier to be a seller today than a buyer, I think. So we've got crude inventory coming up in about 10 minutes time, and we have a very constipated crude oil market. It is dead sideways. It opened down here, so the actual day range is only this tiny little range right here. The overnight range a little bit wider, but it does give the impression that we may get a significant breakout higher or lower on the inventory report. So this is always a little bit of a challenge. When I use the OCO function, I always try to set it so that it leaves the market in the middle. It kind of gives me an even chance, higher or lower. 40, that's 400. I debated shorting below here. Oh, the other thing I would recommend is that you go to manual mode and you use your stop limit ticks. Crude oil can be a vicious market when it comes to slippage. I'll cap my slippage at 3 ticks. The entry, I think, is, for the short side, is relatively simple. I think it's going to be below the overnight low. And I'm going to use a sell limit. And I suppose by the same logic, I should enter above the overnight high, and the median line is right nearby, so I'll take that. That's about $300. That's about $300. Okay, so I'm pretty much in the middle of the current trading range of crude oil. I also want to make sure I have a stop enabled. looks like they're jockeying for position just prior to the inventory report. Kind of testing the top end and the bottom. Now, when you're running these types of trades as well, these OCO orders, you want to make sure you don't get into a trade too early. The whole idea was to keep the market relatively neutral relative to my orders. And you can see that crude oil actually producing a soft edge buy signal. Oh, are you guys going to make me have to cancel my order? Okay, according to the Raptor anyways, this last swing, it looks like the market is going to become more bullish, and I'm going to have to close my order out because now I'm too close to the top end of the range. Okay, obvious we have a little bit of selling going on here at the median line near these highs. Come on, crude, get back inside that trading range. There we go. Get down there. What time is it? Oh gosh, only a few minutes. I don't know if I'm going to be able to pull this off. The sell order is easy enough. The buy order, not so much. Where am I going to put that buy that I'm not just within hiccup distance? I Well, I may have to let the report hit the market and then adjust my position after the report comes out. This little run up makes me think maybe there's going to be more active selling. It would not be beyond crude oil to get a bunch of buyers long only to send the market screaming lower. All right, well, here we go. We're going to watch it. I don't have parameters that I like, so we'll see what happens after the inventory report comes out. The Geiger counter and our bid-ask bars are going to go crazy here in a moment. We'll start to see some large order flow. All right, here we go. Come on down, just a little bit. Okay, so here's going to be the top end. Where's the bottom end? I guess right here. All right, so what I did is I allowed the report to hit the floor, and I bracketed the range of the report itself. So the report range right here. And we'll see which way they want to go from there. I'm going with the parabolic strategy because it tends to be a little bit more aggressive, and it's obviously also automated. Oh, what happened there? Well, that was odd. Okay, let's try that again. Okay, I've got my stop active. Well, it's starting to look like the whole crude inventory report was a great big nothing burger, as they say. This will be the last chance here. So I'm looking to short now below the primary support line. That's that blue line. The top end doesn't look like it's going to be a consideration at this point. Okay, that's better. Come on. Come on. Jeez, what you guys doing to me here? Okay, boys and girls, don't do this at home. All right, excuse me just for a moment. Sorry about that, folks. Just had a phone call I had to take. All right, well, they're still plodding along here. I'm doing my best to give this trade every opportunity to work out. I've kind of stretched myself on the risk side of the equation. But if I can get another bar or two here to form on the sell side, then I'll be a little bit quicker with my stop strategy. But it looks as though crude oil still pretty content to trade within this larger sideways trading range. All right, well, I'll just try to nurse that at least into a break even or maybe even a slightly profitable position. Yeah, tomorrow's Friday, the end of another work week. We'll get together and do it all over again then. I will talk to you tomorrow. Bye for now.